So we have a choice. We can either sit there and let them dish it out to us, or we can do something about it. So let's see what questions you might have. We have a microphone here, so first question.
You mentioned the FDIC briefly, and I was just wondering, I've heard that they only have about $60 billion in reserve, and I'm wondering, is it really broke?
Yeah, what they can do, the FDIC, again, can cover roughly 1.5 cents on the dollar of all their deposit fund liabilities. So yeah, it's broke compared to what the risk is. You could have a major bank failure and deplete the whole fund. But when you challenge the FDIC with this statement, the FDIC said, yes, that's true, but we have direct borrowing authority from the United States Treasury, which is true. But again, where does the Treasury get the money? Tax it, borrow it, or print it. And you end up paying the cost of your own bailout. So this is why I'm saying that, that you move into the gold and silver as a hedge where you have money in any circumstance. In fact, I tell people, and it's a hard concept to understand, well, what if I get into gold at $1,000 and it goes to $400? Well, it's a non-event. Because when you peg your dollar value at $1,000 and it drops to $400, this means the value of your dollars have gone up, and as a relation, your purchasing power has stayed the same. Conversely, if the value of gold, the price of gold goes to $4,000 an ounce, you bought it at $1,000, your gold is not worth any more the day that you bought it. It's just your paper is worth less, and it's just a hedge to protect you and have money and purchasing power in any circumstance. So quite frankly, I think when we're depending upon the sticker principle, the gold sticker of the FDIC, it's just a stopgap to make sure we get some paper back in hands, but it won't buy a whole lot for you. Next question.
My question is, okay, with our economy in a recession, okay, and Europe is slowing down and Asia is slowing down, they have 32 what they call inverse ETFs, and that's like hedging.
Yeah, that's exchange traded funds, and so they have all these funds to as a hedge against the downturn, right?
Yes, that's what. And I just want to know what your opinion on, because they got a double ETS. If everything go down 30%, you'll get 60% return, and they got 32 of them on the market, and that's supposed to be your protection in these downturns. And I just want to know what your opinion on buying into these inverse ETFs.
Not much. I'm not real keen on those, and let me tell you why. Because the ETF, you're depending on somebody else's performance, which means that when we look at these are all tied into the derivatives market, the hedge fund markets. And when you have all of this leverage upon leverage upon leverage, that's why they can tell you you're going to have, if a 30% decline, you're going to have a 60% return. Now, somebody's losing on the other end. Now, if you have people losing on the other end, you may have default. And as a default, you have nothing to back this up. So as a result, I would be very hesitant to put a lot of faith in those things, because you have a lot of venerable institutions. Even the former chief economist at the IMF the other day said there is a major brokerage house that's going to go under this year. And that's why I'm saying that all bets are off when a lot of these things happen.
During recessions in this country, from what I have been reading, the Swiss franc normally goes up 30%. And for its currency, do you recommend any way of trying to get Swiss francs, because they are a neutral country?
I would just remember that even the Swiss franc, the paper franc. Now, the Swiss francs I like are the gold for Swiss francs. That's the only currency I'd really want of Switzerland right now, because, see, even the Swiss franc is backed by about 10 to 15% gold, but it's not redeemable in gold, and that's your key point. So the Swiss franc is just another currency. They're all sinking, some just sinking faster than others. So rather than go to a cheap substitute, I'd have the real thing. I'd have the gold Swiss francs rather than the paper Swiss francs.
All right, thank you.
Thank you.
My name is Jeff Wenninger, and I was wondering, as you explained about how printing more money, the effect that that has upon the economy, what about the stimulus, economic stimulus rebate checks, like the $1,800 I got not too long ago? Doesn't that have the same effect?
No, no doubt about it. It was kind of like a Band-Aid on a cancer. And it looked good, covered up the problem for a while, but the effects of the stimulus are now running out. So it was a temporary fix. The government always messes things up. Now, if they really want to stimulate it, get it into the economy quicker, rather than write a check, let me tell you how they did this. It cost $40 million to send out the letters to everybody to tell you the checks were coming. And then it cost another $40 million to print the checks. Wouldn't it have been better just to reduce the withholding rates on your paycheck? That way people get money back into the economy. But see, this kind of flies in the face of people in Washington. They want you to come to them and be dependent upon them and get a government check. See, again, government has no money that it first didn't take from somebody else. They took the money from you, and then they're making a big deal of they're giving part of it back to you. And that's just hogwash. But the stimulus type thing is, the only time you have a real stimulus and it helps the economy is when you reduce taxes. In fact, quite frankly, the only thing government can do to help the economy is reduce your taxes. I get really amused at all these people, well, I think Obama will be better for the economy or McCain will be better for the economy. Hogwash. The president, all he can do is be a cheerleader for the economy. In either that or reduce your taxes. The other person who is more powerful than the President of the United States on the economy is the Chairman of the Federal Reserve, because he determines what the average person's car payment's going to be, what their house payment's going to be, and whether you have a job or not. That's the real heart of power.
Thank you.
Thank you.
Dr. Bates, you said that cash at the crash is king. Can you please elaborate? And would there be a chance of the government saying limiting the use of gold and silver as far as redeeming that for cash?
Sure. That's a good question. When I say cash at the crash, liquidity is always a big thing. What did Bear Stearns have a problem with when it almost failed? They had a run on the bank and the lack of liquidity. Anytime you have a run on the bank, you have lack of liquidity, and as a result, that is what is king. What does everybody run to the Federal Reserve? The Federal Reserve ambulance, when it rolls in front of a bank, what is it bringing? Infusion of cash, like a blood infusion, blood transfusion. It brings an infusion of cash. So if you have the currency at the crash, currency in your money market and CDs, and currency in your gold and silver, then that's when I say it will be king. But yes, they could restrict the redemption of gold or the holding of gold. I think it probably will be a confiscation of gold. This is why we recommend people have the right kind of gold. And that's gold that's exempt from confiscation under the Emergency Powers Act, Section 2B of the Emergency Powers Act. And by the way, anybody watching by video, you can simply call the number on the screen and get a free economic education package, and that will show you the right kind of gold to have that is currently exempted from confiscation under the law. I think government will be desperate and do a lot of things under the Emergency Powers Act, but we just have to, as the Bible says, behold, I send you forth as sheep among wolves, be ye therefore wise as serpents. And the other thing I want to emphasize is that our God is not a God of fear, but He is a God of love and of power and of a sound mind. And that's why we do these conferences and produce these videos to help people understand the times that we're living in and make sound, solid preparations for what's coming. Thank you.
Larry, I think you said earlier that the government has two options: to either print more money or to collapse the economy. Is that,
Yes.
did I understand you correctly?
That's correct.
Back when they had the Bear Stearns buyout in March, shortly thereafter, I mean, we've seen a record number of foreclosures, we've seen a number of banks closing down, and 3 independent sources I heard that there was a secret session of